The U.S. economy grew at a slower pace than anticipated in the last quarter of 2024, according to the government's GDP data released on Thursday. Concerns about a recession linked to COVID-19 remain unfounded. Real GDP increased by 2.3% from the third to the fourth quarter of 2024. The figure represents an annualized rate based on inflation-adjusted data. The Commerce Department provided the initial estimate Thursday morning. Economists had predicted a 2.5% growth in real GDP. This marked the weakest fourth-quarter growth since 2018's 0.6%. Real GDP expanded by 2.8% from 2023 to 2024. The rate was lower than in 2023, at 2.9%, but it was still healthy. GDP tracks the total value of goods and services produced within an economy. Expectations for a slowdown in 2024 were largely defied. The Federal Reserve forecasted just 1.4% growth in December 2023. The economy managed to withstand high interest rates. Rates reached their highest levels since the mid-2000s. A feared recession never materialized under these conditions. The U.S. faced technical recessions in 2020 and 2022. Both times the economy recovered after brief negative GDP growth. Recovery was driven by consumer spending, productivity, and a stable job market. Goldman Sachs predicts 2.5% real GDP growth in 2025. The forecast cites Trump's policies as drivers of business activity. However, concerns remain about tariffs causing a potential trade war. The BEA shared its fourth-quarter GDP estimate on Thursday. The economy mounts at a 2.3% annual rate between October and December. LSEG analysts had forecasted a growth rate of 2.6%. Growth in the fourth quarter was less than the third quarter's 3.1%. Consumer spending rose by 4.2% in the fourth quarter. This increase spanned both goods and services. It was higher than the third quarter's 3.7% and the second quarter's 2.8%. Government spending increased by 2.5% in the fourth quarter. This was slower than the third quarter's 5.1% rise. Business investment declined by 5.6% compared to the third quarter. Investment in equipment fell by 7.8%, and investment in structures dropped by 2.2%. Residential investment rose by 5.3%, partially offsetting the decline. Intellectual property product investment increased by 2.6%.